Ladies and gentlemen of the crypto space, we're live on a Tuesday at 12:01 p.m. I'm late. I got meetings all over the place. May 4th, beginning of the week, maybe the middle of the week, but it's all good. Markets are extremely volatile today. So that just reminds us to think about things in a contrarian way. So many folks ping me or post on Twitter, I'm going to buy this. I'm just getting in now. You know how many people are going to buy Doge right now? 50 something cents. They're going to buy tops. And maybe it's not a top, but that's the whole thing. It's a risk. And is it going to go up? Is it going to go down? Nobody knows. If anyone says or thinks they know if a market's going to go up or down, they have no idea. So that's why the market, or even sometimes, in many regards, the assets you buy are irrelevant. What's pertinent is your portfolio balance, the degree of risk you're taking, and how protective you are of your capital. That should be the focus. That should be your primary concern. If you've managed to get capital, you need to protect it. And there's only one real way to protect against deflation. And a deflationary event, all equities and crypto alike will be crushed. And that's what's happening right now. The equities markets are taking a fat shit. Sorry for the mental imagery. And obviously, the crypto space is taking a hit right on the heels of a massive Doge and Ethereum rally. Ethereum ripping, it's gorgeous. So you don't need to have the largest position sizes. Everyone's so damn bullish on Ethereum, including myself, especially with the deflationary pressure coming this summer. It's an extraordinary reality. And the UniV3 launch is tomorrow. So there's massive narratives in play, but folks over allocate to positions and neglect the cash position. I literally just retweeted something about like 70% of NBA players going broke in 5 years. You got to respect the damn cash position. If you manage to make 10,000, 100,000, a million, some folks, probably folks that follow me, have 5, 10 mil. Respect the cash position when cash could be put to work. If you put $1 million to work, making 30% a year, you're making 300 grand a year. Holy fuck. That's a heck of a position. And in a deflationary event, the cash position is going to outperform. In a deflationary event, cash position is going to be put to work, producing a revenue stream. Your assets could do that too. In the crypto space, obviously, you could produce a revenue stream from all your assets, which is what we talk about so much. That's the biggest opportunity, that if an asset in your portfolio isn't being put to work, it's probably got no systemic meaning, and therefore is probably purely running on speculation. If you can't collateralize your asset into a debt position, if you can't access equity stored in an asset, there is no reason for that asset to have value. Can I borrow money against Doge on MakerDAO or Aave? No, I can't. So there's literally no systemic reason for the price to remain inflated. If people see it selling, you'll have the depreciative cascade because those market participants won't have a reason to hold through a depreciative cycle. They'll liquidate because they want to keep their value. But if a person, like with Bitcoin, takes their Bitcoin and borrows cash against it, I have no reason to sell my Bitcoin. I'm borrowing dollars and putting the dollars to work. If Bitcoin's price goes down and my collateralization ratio needs to be adjusted, I take some of the cash that I'm putting to work and I adjust the collateralization ratio. When Bitcoin's price goes up, I have more cash that I could work with. When Bitcoin's price goes down, I have less cash that I can work with, or I could put to work. Can't do that at all with Doge. Can't put it to work. There's no point to have it. But then again, obviously, the markets are completely irrational. People buying Doge have no comprehension of the concept of debt collateralization or monetary systems or even the monetary properties and policies that go into our financial system. And those monetary properties and policies that go into our financial system are exactly what we have analogous in the crypto space now. And that's the perspective I like to have, and the narrative I like to have formed, and the story I like to tell. And everything we're seeing play out is exactly because it's analogous to the legacy financial system, which works. Obviously, the legacy system is perverted in countless regards, and we have our speculative perversion in the crypto space, but there's actually financial system components that work. Anyway, let's pop it over to the main screen. Just when you think the market will go higher, bam, takes a shit. There's some horrible in that or metaphor like that. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. We got RR in the house, Earens in the house, Cal is in the house. What is the reason behind this Doge pump? People have no idea. They don't know what they're buying. They don't know why they're buying it. They're people are on the ropes and they're looking for hope and they're thinking they're going to make a fortune. And what'll happen is exactly what this person tweeted. Where is it? Someone must have liked it. Not one person liked the retweet. All right. 60% of NBA players go broke in 5 years. 70% of lottery winners go broke in 5 years. 78% of NFL players go broke within 2 years. People are buying Doge because they have no idea what the heck they're doing. Mathematically, empirically, that's the case. And probably the vast majority of people buying Doge will end up losing money. So that means for a person like myself, I literally have no interest in participating in such a market. Albeit the only thing that comes to mind is that I could extract money from market participants that have no idea what they're doing. Now, obviously, we could divorce ourselves from, you know, responsibility of it, not responsibility, but it's humanity and kindness and giving and altruism, but that's what markets are. Markets are a transfer of value between people that have no idea what they're doing to people that have an idea what they're doing. That's what I keep trying to tell you guys. These markets are prowled by predators. I'm not a whale. And there's people running around with 5, 10, 50, drop $20 million real quick into Matic, and then bam, price rips, then it dips, and they push around markets. They force capitulation. They convince other people to sell because people think the market will dump, and then boom, they buy back in. They capitalize to the upside. So what happens is when you have enough capital, you're able to push around markets, like a big shoulder push. You lean into it, and that's what they do. Is it That's the deal, Cal. I am JD's in the house. Mick Bond, do you think it's possible, practicable to tokenize subscriber follower accounts? That'd be nice. Our follower account and the viewers on the stream have been increasing of late, which is nice to see, which means we're helping more people, taking less risk, growing a portfolio. You could grow a portfolio, and really the only way to do it is to take less risk. Folks get overexcited and they'll pour all their money into we've been following Matic on our forum, and so folks would buy. They'd be like, "Oh, it's going to keep going up," and they buy at 90 cents, and bam, it shits to 70 cents. And then what happens? They're like, "Oh, it's going to keep going down," so they sell, and they just lost 20% of their money in like 3 days, and that's pretty brutal. So, why? You can't overposition. You can't get excited. Emotions are irrelevant. I've been playing Matic the last couple of days. I think I'm down like 100 grand, give or take. It was only a small part of the position, maybe 15, 20% of the value that I applied to the asset, but I kept getting it wrong. I kept thinking it would bounce back higher, it would breach trend resistance, and it didn't. I still have a position, but what I've done is I've sized it appropriately. I've sized it appropriately to account for the volatility, and now I could just hold it. It's a little bit bigger than my Ethereum position right now. Lost that 100 chip, but I'm up for the week. I'm finally up. I keep going up and down like a half a mil over the last like 2 months. It keeps going up and then down and up and then down. And I finally broke the cycle where I got a substantial cash position on Polygon Curve. And that's just growing. and I could have been more protective this cycle, but I finally broke it. Just been driving me nuts watching it go up and down. So you're doing it right. If every time the market takes a shit and then takes a rip, it goes up. And I missed two cycles in many regards. And that's a little bit frustrating to me because I could have done better. And you know why I missed two cycles? I had too much risk on. I needed to take less risk. I was buying too many assets and I needed a larger cash position. You need the larger cash position when the markets are hot because what happens is, bam, the markets are not. And that's when you buy. You buy down here. And if the market fails, you sell, and then you find another buy opportunity, but you don't do it with an excessively sized position. So, I at one point I had, compared to what I had 8 times as much Matic. My general entry was about 73 cents, was probably right around here actually, where the cursor is. And I wrote it up to here, and then I watched it go down, and I wrote it to here. It was 80s, and so I didn't really lose as much capital as I could have. But I think this is going to significantly outperform over the coming weeks. You know, folks will say people playing Doge, it's up tens of thousands of percent, whatever the hell it's up, and they expect that to repeat. That's not the case for this asset, um, because history one doesn't repeat itself, it doesn't rhyme, and Matic is up 25,000% in the last 2 years. But what happened was it wouldn't go up another 1,000% because it was up previously. The kicker is, look at the difference in market action. This is trivial. This is all speculative, but this isn't speculative. This is not necessarily speculative action. Something happened. The story changed for the asset, so it's now operating on a different paradigm. And as I talk about, it's operating with regard to monetary velocity and actual, properties of a functional financial system, particularly because it has the infrastructure. It has Aave and Curve. So this is my asset of focus for the time being. It's not my largest risk-on position, just because of the history of the portfolio. Bitcoin Bitcoin's up there. I don't want to get into percents, but right now, let's say 30% cash, give or take, um, and which is earning. I mean, it's literally just sitting here in Curve, just earning cash. Why am I not on the Polygon network? I mean, it does. And I get tempted. I get tempted to migrate it back to Ethereum. I'm thinking about Phantom. Phantom does not have critical mass liquidity yet. But it does have Curve. It just doesn't have Aave, which drove the capital inflow. Nice chunk of cash going on in Polygon Aave, generating 25%. But look, this number keeps getting diluted, which is really cool to see. Folks often say, "Oh, it can't last." Yeah, damn right it can't last. Look at the capital inflow, $275 million in less than 2 weeks. I think it was 2 weeks ago that Aave launched, and then Curve launched, and Aave is just on fire. Aave on Polygon has $2.5 billion. That's a heck of a deal right there. So I got a little bit of a Matic position, which is earning 7.7%, 6.72% base APY. That's nice to see. I'd like to get that up to an even 200,000. That'd be nice. But I've taken the gas off, and I was too aggressive, and now I'm being a little bit more prudent with the excessive cash position, which is nice, and I think it's going to make a difference. Anyway, let's keep it going. Yes, man, probs with the UMA protocol, unknown. It's a wonderful protocol that they have a lot of activity and a lot of development, and it's very powerful. But it's just something that I'd be spread too thin if I tried to attack it. I tend to focus on only a couple of assets at a time, and I use a narrative, a very honed and focused narrative on what I should focus on and why I should focus on it. So I have that cash, and I'm not going to deploy that. I'm not going to spread it around. You need a concentrated cash position because that's how you protect against deflationary events. Legacy finance is cash and bonds. But the difference is in crypto space, cash works. So there's literally no purpose for bonds. If I could earn 25, 30% of my cash, it's optionality. It's the way to go. Logan's in the house, the boys, yeah. Winner in trading, sell everything is echoing. No, 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 no. No, no, no. But this is why you have cash. If a good portion of the portfolio is in cash, if there's a significant event, you sell your assets and you bump your cash position, and then your cash position you put to work. And the odds are the incentivized yields on all the protocols will collapse, and what will happen is the transaction fees, the age of crypto transaction fees, are going to go through the roof. You can start getting 15, 20% just on the transaction fees. And that's awesome, and that's what I expect to occur. Let's keep it going. Winter in training. I need Noah's office hours. I try my best. I have a lot of work I got to do today, and I'll try and get some office hours in. But this is where the forum comes in handy. There's a lot of people in the forum now. We talk a lot of technical analysis, which is important because that's growth and risk is how you grow a portfolio. But clearly, as I talk about on the stream every day, it's not about growth and risk. It's about a well-balanced portfolio with deflationary protection and risk consideration and diversification and not spreading too thin and making concentrated risk on bets. So this is obviously what I'm doing here. I'm focusing literally only on one asset. I don't need to focus on multiple assets. You know what happens when you focus on multiple assets? Your head starts to spin around and you have a shitload of anxiety. You're like, oh, I missed out on 30% on Doge, and now you buy Doge at 30% and it takes a 20% shit. No, 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 no. So many of these assets are absolutely extraordinary, but you can't focus on all of them. You can't. So you have to limit your scope. Otherwise, it's not maintainable. It's not manageable. Look, the whole market's taking a fat crap, 10% down. That's crazy. So this is why you got to watch your risk, watch your portfolio balance, and have a significant amount of cash. 67 people in the stream, 24 likes. We can do better. Jonah, you're very welcome. Thank you for listening. And why that makes me happy is because I'm sure you've mentioned some of my ideology to other people, which means it's helping and it'll make a difference as it spreads. I take a bit of a traditional finance approach to the crypto space, which there's more gains to be made in crypto than there is in legacy finance, and because there's more meaning and systemic functionality that's emergent. And what are you going to invest in 1,000 to 1 PNE? That's crazy sauce. No, cash on dollars. Put your dollars to work. Changes everything. Dr. T's in the house. Always a pleasure. Yeah, yellow mellow. But I was promised a $1 Doge. Zach, $1 Doge. Why not? Am I going to play it? Hell no. Crypto Yogi's in the house. James, what's up? Trevor in the house. Fabio, good evening. Dr. T, in a cash position via ETH on Maker when this dip settles. I didn't sell as much of my minor risk assets as I should have the last few days. Again, but now you see. Now you see why we were entertaining that conversation. And it's a fascinating thing to think about in hindsight because you didn't want to sell them. And you didn't want to sell them because they were up or you hoped they would go up further. But then today happens, minus 11% on XRP, 7% on BNB, 6% on BTC. Because the market is hot until it's not. And that's the way it will always be. So whenever you sell an asset, there's always a chance it's going to keep going up. But when it keeps going down or it goes down, you wish you sold it. So I would rather avoid the regret of not selling it because cash works in crypto. And you'll always be able to capitalize on providing liquidity to people that are degenerate and that need to gamble and need to take risk. And they always say, my risk tolerance is maximum. I could afford to lose everything. Yeah, okay. Okay. Trevor, Matic predators have been lurking. That's right, and it's been ferocious price action. I mean, it dipped all the way to the bottom of the guppies, but this is what I see right now. I see a falling wedge, probably emergent. Um, this is the bottom. If you go out to the daily, this well maybe it's the weekly. No, that's vertical. So I don't know. This is what I likely see. I doubt it's like a sim triangle like this. So I'm leaning towards more of a falling wedge type pattern, which is a bullish trend formation. And this is a heck of a flag. It's an obvious flag type of situation. So this is why I have the position I have. It's skewed towards cash on Polygon, but folks will say, why not Quick, or why not other Polygon assets? Because those are more volatile, which means more upside and potentially more downside. And I like Ethereum, Bitcoin, and now Matic, which are root assets for a particular financial system. And I think this financial system will follow suit of BNB. We're talking like another 20x on the money. That'd be nice. Don't try and make as much money as possible. You'll find that if you don't try and make as much money as possible, you'll actually make more money over time. Because as the market rips and dips, you'll lose less money. And the cash position works. That's the bottom line. Your name is on the newest Method Medium article, Twitter quote. Uh, Ehrman, 1952. Yeah, it was a good quote. Sometimes my inner philosopher pops out, and I got some good words. Those are some good words. Synergy. The cent markets, the stuff is just popping off the ground. It's literally ground floor. It's all about synergy. It really is. FM Alexander, WERC20s for free with Pulse Chain Fork free money. That's what I've heard. Free money is dangerous, and I don't look for free money ever. Money involves work, hard effort, and due diligence. Anytime something's free, unless it's like what the best free money that I like, and there's only one source of free money that I like is so I bought a lot of Curve back when it was like 25-30 cents, and now it's worth whatever it's worth. But everyone that forks Curve gives a damn VE Curve airdrop. I'm like, all right, free money. Yeah, I still got money coming in from Ellipsis. I don't even check it anymore because I just how much. Let's see. Let's see what's going on. These guys just keep printing money, and I'm just like, whatever. I don't care because it's just too annoying to move money off of Binance Smart Chain. So I just let it sit and do whatever it's going to do. We'll take a look real quick. 635, so like 1,800 bucks, and I've got a bunch of money locked. This is all free. They just gave it to me, and I'm like, all right, whoopie do. So let's see in June and July, if it looks like Binance Smart Chain is still going to be around, I'll just dump it out or maybe I'll just leave it, and I keep getting this. This is getting diluted significantly as the market matures. Uh, you know, who's 1,800 bucks, give or take? EPS is at what? 217 keeps going up in market cap, not because oh my god, yeah, this thing does. It's not going to pull. It's not pulling a curve anytime soon. It's getting diluted. The emissions. The reason Curve is not getting diluted is because it's Curve, and it has the network effect. That's quite meaningful. James, hit that likes button, everyone. 74 people in the stream, 32 likes. We can do better. Kristen, no, is your long-term strategy to accumulate dollars and put them to work, is accumulate BTC and borrow against it? Both. And that's the balance and the difficulty and the complexity of how to manage a portfolio. So I'm not actively accumulating Bitcoin at the moment because I think the quantity of Bitcoin I have is appropriately sized. It has a good position sizing. So you don't want to have an over position of anything in a portfolio, whether it's Bitcoin or Ethereum or dollars. Think of dollars as a component of the portfolio, and you don't want to overposition it. If you have 50% dollars, you're so overpositioned in dollars. If half your portfolio is Bitcoin, I would argue you're overpositioned in Bitcoin. What you want is reasonable, rational, and logical position sizes. If you're overpositioned in Bitcoin, you probably got a shitload of opportunity costs going on. Albeit, the reason it's different is because Bitcoin you could collateralize and borrow and make a DAO. And that's quite meaningful because you could extract capital and put that capital to work. Tough choices, but there's strategy and logic that I help people uh, uh, I help people understand to make better choices and subtle differences. And too often, folks neglect the size of the cash position. What do you think of under-collateralized loans as potential area of innovation? No, I'm very much against under-collateralized debt. I think the biggest innovation of DeFi is over-collateralized debt, which alleviates risk to the infrastructure in the case of default. With over-collateralized debt, in a default scenario, all the risk is placed on the borrower on their collateral position, which will get liquidated if they default, which alleviates all the systemic risk on infrastructure. AGJEFFNG 2005. What's the price target for Matic? Higher. Peter's in the house. Always a pleasure. Drizza in the house. Good morning. Jaden, hey Noah, do you think that Matic's super low transaction fees maybe reduce the demand for the asset itself due to having less utility and scarcity? Yes, I do. High transaction fees increase demand, and people need to have Ethereum to pay gas. But this does not diminish the speculative price action, and I think it's still an asset off radar. Folks have been talking about Matic for a long time since the Binance IEO, and it was hot, but now it's a very different narrative. It's a different story. It's going to attract different persons to allocate capital because there's actually monetary velocity that is emerging, and now and only now in the last 2 weeks has banking infrastructure, or components of a financial system. It never did. Never did. A blockchain it isn't inherently money. A blockchain isn't inherently a monetary system. But monetary systems emerge on blockchains, and we've seen that on two thus far, which is Ethereum and Binance Smart Chain, and now Matic. It's the third monetary system to emerge on a public blockchain. I mean, Doge is a perfect example of an asset that literally has no properties of money, just you can't even use it in a financial system. It's literally a useless asset unless you could collateralize an asset, unless you could borrow against it, unless you could put it to work and generate revenue. It's all speculation, and it's not. It's that I don't think there's any substance to assets like that. Um, every asset will have a story that's meaningful, and I think the most powerful story that could be told about an asset is why people need it. People need Bitcoin because one, it stores value, and it stores value because people don't want to sell it and no longer need to sell it because they get access to capital in it without selling it. So unless you could tell a story about an asset, why it should have value, there's no reason why it should have value. No more likely than less lose value. Pumeza, we can do better. Damn right we can do better. Damien says Jade and Matic is demand exactly because its fees are low. Yeah, and also it could be put to work, and it's an ascent. We have no idea what's going to emerge, so it's speculative in that regard. What kind of DeFi protocols can create demand for the Matic asset? Fabio, absolutely agree. Having the majority of a portfolio in cash that is actually working feels so comfy. So you're taking less risk. But as I've said, excessive allocation to any asset, and cash is just an asset, um, would have opportunity cost. So it's not easy to get position sizing right, and there's no perfect position size. There's no perfect way to manage these portfolios. But all you have, it's a dynamic behavior. It's a dynamic process. So what you're doing is weighing pros and cons, taking risks, taking less risk, and constantly shuffling around capital to best express your view of the market. Something Raul always says, Raul Powell. John Schneider, BitCloud, tokenize yourself. Yeah, I don't have time for that, but it's a good idea. Whoops, just realized I'm a few minutes behind. It's all good. And I'm even further behind because I get to people's comments way after they mention them. Dr. T, I know I'm over positioned at E. Speaking of hard to sell, it's hard to sell. Yeah, I mean, yeah, I think that that's a good statement. You know you're over positioned in ETH. But look, it was to your benefit. ETH extremely outperformed the market. So sometimes we get lucky, and that's good. So, it's okay to take profits. It's an asset that you think is going to keep going up. And you'll watch it go up, and you'll be like, fuck, I wish I held it. So this is why I'm firm and confident in saying it's not about what assets you hold. It's not about how much you think something's going to go up in value. It's not about making as much money as possible. If you focus on respecting the portfolio and your goal is to balance the portfolio, that's just the goal, and the portfolio will work for you. So if you constantly are adjusting the portfolio to keep it in balance, assets aren't overpositioned, you're not spread too thin, you're not all in, you have proper position sizing, and you have the correct assets of choice in the portfolio, just let it sit and let it work for you. Just let it work. It'll do what it's supposed to do because you've chosen a portfolio, you've crafted a portfolio, which means you have a capital that's attached to the market. And if your story is right, if your narratives are right about the components of the portfolio, your portfolio is gonna react to the market price action, and that's the bet. That's the bet. Kristen says, thanks for helping us make more sound decisions regarding our portfolio risk. You're the man. Thank you very much. More people. I hope more people could take less risk. Like I say, I actively tell people to sell their crypto assets. Yeah, because you can get 30% on your dollars, and when the market takes a crap, you don't lose any money. You're just actually making money. Because when the market takes a crap, what do you think happens to the transaction fee volume? It goes vertical because people are shuffling around capital, and there's a monetary velocity in the DeFi space, and you're going to capitalize on it because you're providing liquidity. And obviously, the core the place to provide liquidity is Curve, and tomorrow's going to be an interesting day in the coming month or two, and we'll see how Uni v3 spreads across the ecosystem. I don't think Curve's going anywhere though, but we'll see. 70 people and 29 likes. Drizza says we can do better. 75 and 34. Come on, guys. Press those thumbs. Hey, Noah, have you heard of LQTY liquidity? Yeah, it's intended to compete against MakerDAO. Yeah, I don't like new protocols. MakerDAO's from 2017. So even if it has no stability fee and 110% collateral ratio, I don't have much interest in it for the time being. Let it prove itself, and then I'll have interest in it. I'll check it out next year. I'm in no rush. Zach, not showing, but there was $100 worth of Boo airdrop on Phantom Network for anyone farming ALCX USD. Yeah, Scoopy. Was it Scroopy Trooples? She's cool. Smarty pants. She really is. Joe says, Joe, bag of donuts. I just had to say it. Just saying. Hey guys, give it to me straight. Is Visor going to tank right now? No idea. This is why portfolio size should be respectful. Respectful of your portfolio. Let's take a look at the chart. I have the chart right here. We'll see if there's any technical indications it's going to take a fat dump. I got Visor. I have, how much do I have? I have a little bit of Visor. I have like 10,000 Visor. See what it does. Small position for myself. And if it goes up, it goes up. If it goes down, is what it is at this load. I don't know. I don't know. I don't know, Joe. This is a max volatile asset. There's literally nothing interesting about the chart patterns, I would say. Maybe this would have to hold, and I could see a symmetrical triangle forming, but this shit is all over the place. No idea. Maximum risk. Oh shit, Doc says I have learned never marry your bags. No. What you don't care what asset you have. You care if it goes up 30%. And you care if you can pay your bills. And you're going to pay your bills in cash. What you care about is what I tell everyone they really should care about, which is their weekly revenue. If you're not making, good money every week, probably allocated unoptimally, or your portfolio is a bit deficient. You should be making money on a weekly basis, which means you need stable principal. Because if you made $1,000 last week, but the principal on your position dropped $1,000, you made no money. But that's why dollars work. That's why Curve really changes everything. It's a cash printer, 25%. So you want to accumulate dollars, so you put the dollars to work. I believe Keeper DAO have some good stuff lined up for coming month. Looking forward to some utility. I as well. You know, I have good feelings about Keeper DAO. They need deflationary pressure to establish solid monetary properties. It's a decaying inflationary curve. The last time some of their articles they were publishing, but that means it's debasing, and technically that's the same for Bitcoin. But the Bitcoin is a decaying inflationary curve, which halves every 4 years. So there's nothing wrong with decaying inflationary curves. That means it takes a long time for the market to price in the decrease in supply in emissions. So what's profound in the DeFi space isn't just the decaying inflationary curves, which has a very long time horizon. What's profound is the deflationary protocol properties, which significantly reduce the time horizon for to trigger appreciation of the asset's price. Deflationary pressures proactively trigger price appreciation, and there's a lot of it in the DeFi space. So what do you recommend doing with your Matic position? Staking on Aave? Yeah, I think that's a good one. So that's what I do. I'm tempted to go on Stake DAO. I don't know, as the Aave winds down, you go on the Stake DAO and you're able to go to staking. And they have Polygon Matic, so now you're taking your Matic and you're applying it to a validator, so you're helping secure the POS network. I think there's good logic in that. Become a delegator, nice and simple. But for now, Aave is outperforming. So this is the place to put Matic at this point, especially as the volatility is pretty extreme. You're getting a large amount on your base principal, which is quite meaningful. You're getting incentivized and you're getting base interest. Awesome. Larry's in the house, new to the channel. Love your stuff, man. Any thoughts on Carbon Swapped or Susu? I have no idea what either one is, my friend. uh, be careful and be risk considerate. It's probably a volatile asset, and for me, volatile assets, I'll apply 1% of the portfolio, 2%. Sometimes I get crazy. I'll have a beer and I'll go 3%. Whoa! Just I don't touch new things. There's literally so many reasons not to touch new assets. Um, Probably the newest assets that I have in the portfolio are these four. But XTK's, while it's a volatile asset, they have a heck of a track record with their X tokens. So this is the one I'm more comfortable about out of these four, and obviously Alchemist, because of their GitHub developer activity. Source control seems to be extremely active. Visor's next on the list, but it's kind of like disappointing the amount of GitHub activity we see, and Method basically is completely absent all GitHub activity thus far. So just food for thought. Do you have a risk appetite for Polywhale or the forks that appeared already? Zero. Zero interest. But you know what I like to see? I like to see people playing it, because that means they're converting one asset to another, and that means I'm capitalizing on their degeneracy. I like to see people aping into whatever DeFi protocol launches, because ultimately that'll end up going through Curve. Because if you bring cash onto because the pairings, it has to do with the pairings. Um, And as the platforms mature on Polygon, more will go through Curve, which means you'll get your base APY and your rewards. I mean, look at this daily volume, 21 mil. So it's almost 10% on the 273 mil in deposits. And then you have, how big is the market up to? $2.5 billion. And folks are, oh yeah, I was looking at this. This is cool. So this was a Curve fork coming out on Phantom. I don't like forks. This reminds me of ellipsis. I like the fact that frickin' Curve is deployed on Phantom, and Curve is deployed on Matic. It's Curve. You don't need to fork a project. There's already a Curve on Phantom. But what's nice is that we'll get a fat airdrop, and that's cool. And I'll sell it. Yeah, I'll sell it, and I'll buy Curve with it. FOIA will never cannibalize Curve extract. Support the Curve fork with a new token that also be dropped to VE Curve holders. So yeah, I'll take that VE Curve airdrop and I'll buy Curve with it. But check this out. This is pretty cool. This website is pretty cool. L2beat.com. I wish they had Matic on here. I'm not quite sure why it's not there. Mostly L2. Like more like Optimism, ZK rollups, and Arbitrum. That's strange because it doesn't even show Arbitrum either. You know, I'd like to see, because this is more so displaying what's going on with Polygon. And this morning it bumped to 371. This is 3.33 billion yesterday. So look at that. It's already a significant portion of BSC. That's just as visually observable how much Polygon is outperforming these other networks. The other ones are microscopic compared to Binance Smart Chain, but Polygon is all of a sudden like 30% the size of Binance Smart Chain in 2 weeks. That's crazy. So the narrative is solid. The price action is irrational. So that's what I always tell you guys. Fundamentals tell you where to look and technicals tell you when. So right now the technicals say have hesitation. We could have a mean regression to the 100 SMA on the 4-hour, which is this blue line right here. The fundamentals are pointing me here. It's the only thing I care about right now. And I don't need to just hop around to assets. But you get it with the slippage, you get killed and you end up destroying a portfolio. Mom, you're very welcome. I am learning so much from you. Thank you. And tell other people. But you teach them too. Tell people what you've learned and tell them to take less risk. Where would you put around 20K spare dollars to work efficiently? Start with cash. Cash, if you're not familiar with these assets and the risk profiles, and if you cannot assess how much risk you're taking, put your cash in Aave and treat it like a bank account, because cash in Aave earning whatever the hell it's earning, 4, 5, 6, 7, 10% at times, USDC, there's no point to keep it in a bank account. You keep it in a bank account because it's FDI insured. Boom, go to Nexus Mutual or Armor Fi and get an insurance policy if that makes you happy. But Aave is a bank account. That's the bottom line. Stay says, I put mine in Curve. I'm no way. Yeah, Curve's cool. Curve is basically Forex. Aave is banking. That's it. Ryan, Noah, have you looked into helium at all? You able to generate passive income and build a decentralized Wi-Fi network? No interest at this time, my friend. Maybe later. Mom, you've recommended to lock some portfolio on Curve to boost the APR. So that's a complicated story, and that's a decision only everyone can make individually. I myself have a large Curve position. It's not $1 million, but I bought my Curve at 25, 30 cents, about 50,000 Curve. Back when I bought it for like what 15, 20 grand, and now it's worth like 180, 200 grand. It's pretty cool. So you need a large Curve position to boost that APR. It's just APR, it's not APY, to get the boosted emissions. But if you don't have a large Curve position, or you can't afford it, you go to Yearn Finance, which has community boost, or Convex Finance, which is coming out sooner or later, which will have community boost. Convex. See if it works today. Their homepage was down the other day. Yeah, boosted Curve staking. So Convex Finance is where you want to go if you don't have an already existing large Curve position. Martin says, thoughts on Quick? Well, I use it. I use QuickSwap. The asset, I'd rather focus on Matic. John Schneider, with optimism and improvements to ETH, do you fear that Matic narrative will weaken? Yes, but what you want to watch is network activity. And what I'm looking for is Polygon to eat into Binance Smart Chain, which it already is doing. There's a huge amount of people that don't have a capacity to operate on Ethereum, even if it was 40 Gwei. They can't afford $5 transactions. They can't afford $10 transactions. And that's real. Actually, the vast majority of the planet can't afford $5 transactions. I'm pretty sure the vast majority of the planet wouldn't operate on $2 or $1 transaction fees. So they're not operating on Ethereum, and that's why BSC is so hot. But Polygon is a fraction of the price of BSC. Polygon makes Binance Smart Chain look expensive. How about that shit? Lucas, new project just announced today. There will be a curve fork on Phantom for VE curve holders. Yeah, that's what I was looking at. Is this frozen yogurt finance? Makes me want to put my head in a freezer and turn it into frozen yogurt or a popsicle. Did they really have to name it frozen yogurt finance? What's the matter with these people? Yeah, so I look forward to the airdrop, and I'm going to sell it for curve, and that'll be nice because I want more curve. What's the add-on you just showed us for ETH gas prices? Yeah, this cute little widget, um, DeFi Savers gas widget. DeFi Saver, DeFi. They've got a. That's a heck of a protocol project. DeFi Saver. These guys are great. They've been around a long time, and they've been around a long time, and that's cool. That's cool. Jay Sampson says, "Lol." 84 people in the stream, 41 likes. Doing pretty good, but we can do better. Let's wrap up the stream. Anyone who's jumping in late, feel welcome to rewind this bad boy. As always, there's a lot of good content. Tuesday, May 4th, 12:48 p.m. For folks that don't know, our Discord forum is on fire. We have a huge amount of content. I'm in there all day long. We got a lot of people that have a lot of experience that are helping and sharing their ideas and just encouraging folks to make more rational and logic decisions, actively engaging with everybody, talking about LP positions, talking about risk on, and we got technicals channel dealing with Matic and this awesome volatility that we're experiencing. Wonderful channels talking about all the protocols of Ethereum, Phantom, Matic, and I'm thankful that most people are avoiding BSC. But it's just a great place to find people that are doing things differently as compared to the prevailing degeneracy we see in the crypto space. Discord links on my Twitter profile. Let me get it for you guys. Here you go, guys. All right, let's wrap it up. I thank everyone for joining me today. Tell everyone to subscribe, and I will see you all tomorrow. Peace.